This is John Grover. It's May 1st, 2018, and I'm going to do a brief market update as I do every month at the beginning of the month. This month I'm going to start with looking back at the chart that we looked at before the pullback that we're currently experiencing began. As you'll remember, we looked at this indicator here. I'm circling it now with my cursor. And that indicator showed that the market had been extremely strong. Obviously, we knew that anyway. But it was so strong that it had exceeded many areas in the past. And we had some examples in the past to give us specific expectations going forward. And this is true oftentimes of indicators. They're really valuable in this way. So at that time, I drew this yellow box on the Dow and said we were expecting a 5 to 17% pullback. We certainly have hit that window. As of last month's end, I expected a bit of a rally, and we really didn't get that this month. The market did a tiny upswing, but it tested a new low and has just been recovered and basically stayed almost unchanged throughout the month. So let's look at where we are. I still believe, based on history, that we're going to get a rally. But if you look at this box, the 5 to 17% pullback, we could also pull all the way down to this 21,662.73 in the Dow and still be within the range of pullbacks experienced in the past when we exceeded this strength level. Let's look briefly back at this history. Right now our indicator is down at this green level here. We're just going to kind of scroll back in history and look at what happened in the 2000 time frame before the bigger pullback in 2000. In fact, this is the pullback in 1998. So we tested this red level in the indicator and pulled back. In this case, in 1997, we pulled back as far as the green line that we've marked currently. If that gets too complicated, let's briefly look at it again. Currently, we have pulled back in the market, and the indicator has shown that it's touching this green line. There's nothing special about that. It's just where we are. So going back to this previous history point, we tested this green line in the past, and then we marked a new high, which is what we still expect. And the percentage change from low to high was 35%. Then we retraced almost all of that gain before proceeding again. So I'm not saying that's exactly what will happen, but this is a really good divergence at a new high, and this is basically what we expect. Briefly, looking back previous, same sort of thing. We tested the new high, or tested the indicator high, tested the green level. So somewhere near here, note that the green level was tested here, and that was basically the bottom month. I'm not saying that's going to happen this time, but it could be that we're in the bottom month. Then we had a very nice strong rally. Of course, this is the rally before the 87 crash, so it seems dangerous, but it was a 55% rally. I'm not saying we're going to get that size of a rally. Actually, I don't think we will before we get a bigger pullback. But at least the old highs are accessible and should be realized somewhere in here, and we should have somewhere at a 10 to 15% rally, somewhere up here. I'm expecting one of these levels to be tagged 28,000 or 28,743 to be tagged in the Dow before a larger pullback begins. So returning to our normal set of charts, looking at the S&P first, and this is a weekly time frame, unlike the other chart, which is a monthly time frame. Everything points to this being a consolidation, basically heading to a new high. The support levels drawn below could still all be realized in this pullback, and the market would still be just in a pullback relative to the long uptrend we've had since 2009. The end point would come, in my view, somewhere way down here. If we broke down below this 2300 level, in fact the 2200 level, that would indicate the trend was over. But I believe we're going to get a pull up sometime soon into these higher resistance levels. Briefly looking at the indicator on the weekly, it has bottomed at a spot that has been important in the past. As you can see here, this dark green line and the green line have indicated nice buy spots before, but currently it is bouncing off the dark green line and it is failing a little bit at the brighter green line. And what has happened there? We have a few instances of that where we can see that the market pulls back slightly in those situations. In some situations like 2008, it is not such a slight pullback. Note this area here. So we have to be prepared for a fall to a lower level than the current 2634 level. That said, today's price action was pretty good, and we may actually have a reversal off a low and a rally up from today. But note that we're still in this box that is not very attractive for us as far as buying, and we have to wait for this virtually inevitable upswing to come. Briefly looking at bonds, they did fall back, but they did not make a new low. This is the 30-year bond. I do believe it's going to tag one lower level here in the next couple of months, but currently we're also getting at what's called a divergence in the indicator. Note the prices are lower and the indicator is higher, and that may mean that we actually have a upswing first. We may have the bonds test up here and then fall downward again. All of that is possible. We're in this confusing consolidation phase, sort of like over here, and anything can happen. But ultimately, I think we may make one more low down here, a little bit higher interest rates, and then we will rally up from there and see how it does at that point. Let's look at gold. Gold, we talked about the great risk reward if it popped up above this. Some people saw this pop above this level as adequate, but it apparently wasn't, and now gold is falling back probably to this pink line at least, if not all the way to this line down here at 1133. The dollar has been stronger, surprisingly, so that seems to be what is fueling this fall in gold. But all bets are off on gold until it breaks above this level. Meanwhile, it's going to be stuck in this sideways pattern, and until it changes that, we can't change our opinion. Thanks a lot for watching. If you like this video, please click like and follow my channel. I appreciate it.